Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohnar Pingri, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. Welcome to video series What Law Says, Indirect Tax GST Part 5. Today we will discuss case laws reported to High Court under GST law. So let's dive into it. Let me allow to share my screen. And also wait till the end of the video so that you will get conclusions, one-liner conclusions that can be drawn today today's case laws. So wait till the end. So let's begin. What law says indirect tax part 5 GST. First case. Meghmani Organocem Limited versus Union of India 2024 22 Central Tax 388 Gujarat High Court. Date of order is 14th June 2024. Let's understand facts and issue of the case. Meghmani Organocem Limited challenged the levy of GST on extra neutral alcohol (ENA) used for manufacturing alcoholic liquor for human consumption. The department treated ENA as taxable under GST, citing it as a supply of goods under the CGST Act. The petitioner, that is assessee, argued that ENA is not liable to GST as it is intended for use in the manufacture of alcohol for human consumption, which is outside the scope of GST. Issue was under consideration whether ENA, extra neutral alcohol, used in the manufacture of alcoholic liquor for human consumption is liable to GST or falls outside the purview of GST under the Constitution and CGST Act. Let's see what Gujarat High Court observed and held. The Gujarat High Court analyzed the legislative framework and intent behind Article 246A and Entry 84 of the Union List and State List Entry 8. It noted that alcoholic liquor for human consumption is excluded from GST, and if ENA is used exclusively for this purpose, it cannot be subjected to GST. The court emphasized the purpose-based classification, that is, the end use of ENA determines the taxability. So the court held that ENA used in the manufacture of alcoholic liquor for human consumption is not taxable under GST, directed that GST shall not be levied on such ENA, reaffirming that it is covered under state jurisdiction. The decision clarified that classification of ENA for GST purpose depends on its end use. End use is important, and no GST applies if used for exempted purposes, that is human consumption. Next, Prince Steel versus State of Karnataka 2024 Central Tax 314 Karnataka High Court. Date of order is 18th September 2024. Relevant section is section 74 of CGST Act 2017. Let's understand facts and issue of the case. Prince Steel was issued GST demand and penalty by the State Tax Department. Department alleged non-payment of GST and wrongful ITC claim. Proceedings were initiated under Section 74 of the CGST, that is KGST Act, fraud, willful misstatement, and suppression. Issue was under consideration whether Section 74 could be invoked solely for short payment or disputed GST without proof of fraud or suppression. Let's see what Karnataka High Court observed and held. Mere non-payment or short payment doesn't automatically justify Section 74 action. Mere non-payment or short payment doesn't automatically justify Section 74 action. Specific evidence of fraud, willful misstatement, or suppression is mandatory. Show cause notice must clearly outline grounds with supporting material. Generic allegations are insufficient. Invocation of Section 74 was invalid. No evidence of fraud or willful suppression. Proceedings quashed. Department permitted to proceed under Section 73, that is non-fraud cases, if necessary. Section 74 cannot be mechanically applied for every GST shortfall. There must be application of mind from the department. Due process and natural justice must be followed before imposing penalty under Section 74. What? Due process and natural justice must be followed before imposing penalty under Section 74. Next, Otsuka Pharmaceutical India Private Limited versus Union of India 2024 Central Tax 141 Gujarat High Court. Date of order is 19 September 2024 and the relevant section is Section 54 of the CGST Act 2017. Let's understand facts and issue of the case. Otsuka Pharmaceutical India sought a refund of unutilized input tax credit, that is ITC, on zero-based supplies under Section 54 of the CGST Act. The company sought refund of unutilized input tax credit on zero-rated supplies under Section 54 of the Act. The refund was denied by the department on what grounds? That the relevant notification restricting the refund for certain input services like ITC on input services used on exports was retrospective. The issue was under consideration whether the denial of refund based on retrospective application of a notification or clarification which restricted refund of ITC on input services was valid in law or not. Let's see what Gujarat High Court observed and held. Retrospective denial of ITC refund is impermissible. What High Court states is that retrospective denial of ITC refund is impermissible unless the law explicitly authorizes it. Subordinate legislation, the notifications cannot override statutory rights under Section 54. Very important. Subordinate legislations or notifications cannot override the statutory rights under Section 54. The GST framework allows exporters to claim refund of ITC on inputs and input services for zero-rated supplies unless specifically restricted by statute, not just a notification. Notifications cannot curtail a taxpayer's vested right unless backed by express statutory authority. Relied on judicial precedents emphasizing harmonious interpretation of Section 16 ITC entitlement and Section 54 refund entitlement. The Gujarat High Court quashed the department's rejection of refund, held that refund right under Section 54 cannot be curtailed by retrospective notification unless expressly permitted by law. Taxpayers are entitled to full refund of accumulated ITC, including on input services for zero-rated supplies, that is exports. Director the department to process the refund with applicable interest. Very good case law. Next, DNA Aggrotech Private Limited versus State of Assam 2025-27 Central Tax 331 Guwahati High Court. Date of order 21st March 2025. Relevant section is Section 74 of CGST Act 2017. Let's understand facts and issue of the case. DNA Aggrotech Private Limited was subjected to demand and penalty under GST for allegedly wrongly availing input tax credit on agricultural machinery supplied for export-oriented agriculture activities. What company was subjected to demand and penalty under GST? for allegedly wrongly availing ITC on agricultural machinery supplied for export-oriented agricultural activity. The department alleged that ITC was ineligible since the machinery was claimed to be used for exempt or non-taxable agricultural operation. Key issue was under consideration whether ITC on capital goods and inputs used in export-oriented agricultural activities, which are zero rated, can be denied, and whether penalties under Section 74, fraud or suppression, were justified without specific evidence. Very good case law covering two issues, whether ITC is eligible and whether, if it is not, then whether Section 74 application is correct or not. Let's see what Guwahati High Court observed and held. Exports are zero-rated supplies under GST, Section 16 of IGST Act. Hence, ITC cannot be denied merely because the goods are used for agricultural operation so long as the final supplies are exported. Exports are zero-rated supplies. They are not exempt. They are zero-rated. Okay, so hence ITC cannot be denied merely because the goods are used for agricultural operation so long as the final supplies are exported. The department failed to prove any fraud, willful misstatement, or suppression, which is a mandatory requirement for invoking Section 74. Penalty cannot be levied mechanically. Burden of proof lies on the department to establish intent to evade tax. Relied on precedents affirming that zero-rated supply chain enjoys full ITC benefit unless expressly restricted by the law. The Guwahati High Court set aside the GST demand and penalty, held that ITC is admissible on capital goods and inputs used in producing zero-rated supplies, that is exports, even if related to agricultural operations. Section 74 invocation was invalid as no fraud or suppression was established. The case, if at all, could only fall under Section 73, non-fraud cases. Directed the department to refund any recovered amounts with interest. Next, Infodesk India Private Limited versus Union of India 2025-26 Central Tax 241 Gujarat High Court. Date of order is 2nd January 2025 and relevant sections are Section 140 of CGST Act 2017. Let's understand facts and issue of the case. Infodesk India Private Limited claimed transitional input tax credit under Section 140 of the CGST Act by filing Form Trans 1. Due to technical glitches on the GST portal, the company's credit claim could not be filed or was filed incorrectly within the original deadline. The department rejected the credit claim on grounds of time limitation, citing that no further window for revision was permissible after the earlier extension periods. Key issue was under consideration whether denial of transitional credit due to technical glitches, and procedural lapses was valid when the taxpayer's substantive right to carry forward credit was at stake. Let's see what Gujarat High Court observed and held. Transitional ITC is a vested right if lawfully accrued under the erstwhile regime. Denial based on purely on procedural grounds or procedural lapses violates the principle of equity. The Supreme Court in Union of India versus Philpot Trade Center Private Limited 2022 directed reopening of the portal to allow taxpayers to claim genuine credits. The same principle applies here also. Administrative or technical lapses cannot extinguish a taxpayer's lawful credit entitlement when there is evidence of bona fide attempts to comply. The department must examine claims on merits rather than rejecting them summarily or outright on technical timeliness alone. Very important case here. The Gujarat High Court quashed the rejection order and directed the department to verify the credit claim based on supporting evidence, returns, invoices, ledgers, allow the transitional ITC if lawfully due, notwithstanding procedural or technical lapses. process the credit with interest if delay is attributed to departmental or system issues. Reaffirm that transitional credit cannot be denied for mere technical defects, provided the entitlement is genuine and verifiable. Next, Nand Kishore Gupta versus Additional Director General, Directorate General of GST Intelligence 2025, 27, Central Tax 292, Delhi High Court, date of order 17 December 2024. Relevant sections are section 69 and 132 of the CGST Act 2017. Let's understand facts and issue of the case. Nanda Kishore Gupta, a director of a trading company, was arrested by DGGI under Section 69 of the CGST Act for alleged GST evasion and fraudulent ITC claims exceeding rupees 5 crore. He challenged the validity of his arrest without issuance of a proper show cause notice or completion of adjudicating proceedings. The DGGI's jurisdiction to arrest and initiate prosecution before adjudication under Section 132. Key issue was under consideration whether arrest and prosecution by DGGI before completion of adjudication or without a final show cause notice is legally sustainable under GST law or not. Let's see what Delhi High Court observed and held. Section 69, read with Section 132, empowers authorities to arrest even before adjudication if the offense involves serious fraud or tax evasion exceeding the threshold of rupees 5 crore. However, DGGI must strictly follow CBIC instructions, including instruction of April 2023 and related prosecution guidelines requiring sanction from Principal ADG, Additional Deputy General, and compliance with procedural safeguards. Arrest powers must not be used as a substitute for investigation. Custodial interrogation must be justified with material evidence. The Delhi High Court upheld the power of DGGI to arrest before adjudication but laid down conditions what arrest must be sanctioned by the competent authority as per Section 132, subsection 6 and CBIC guidelines. Detailed reasons and material evidence justifying custodial interrogation must be recorded. Taxpayer retains the right to seek regular bail, and any prolonged custody without progress in investigation would be treated as arbitrary litigation. Directed that any subsequent prosecution must be aligned with adjudication outcomes. If exonerated on merits, prosecution should be withdrawn. Next case, BLA Infrastructure Private Limited versus State of Jharkhand 2025-27 Central Tax 81 Jharkhand High Court. Date of order is 30th January 2025. Relevant sections are Section 2, subsection 119 and Section 74 of the CGST Act 2017. Let's understand facts and issue of the case. BLA Infrastructure Private Limited, contractor engaged in mining related infrastructure works, was subjected to GST demand and penalty. A contractor engaged in mining related infrastructure works was subjected to GST demand and penalty. The department alleged wrong classification of services by the CC as works contract, attracting a higher rate of GST instead of composite supply for mining infrastructure eligible for concessional rate. Key issue was whether the services provided by the company constituted works contract under Section 2, subsection 119 of the CGST Act, which will attract a higher GST rate, or were part of composite supply directly connected with mining operations eligible for concessional rate. Very good case. Let's see what Jharkhand High Court observed and held. Classification must be based on dominant nature of the supply. Classification must be based on dominant nature of the supply and contractual scope, not just on nomenclature in invoices or contracts. What is important is the dominant nature of supply and contractual scope, not just the nomenclature in invoices or contracts, the description in the invoice. The contract primarily involved site development, road construction, and support infrastructure directly for mining activities, which are typically treated as a part of mining support services. So what is important is that the contract or scope of the work than the any description in the invoice. The contract primarily involved was site development, road construction, and support infrastructure directly for mining activities, which are typically treated as part of mining support services. The department's reliance on broad definition of works contract ignored the specific exemption or concession entries for mining infrastructure in GST notifications. Reiterate that the penalty under Section 74 requires proof of fraud or suppression, not mere differences in classification. The Jharkhand High Court set aside the GST demand and penalty, held that the services constituted mining-related support services, not works contract, and hence eligible for concessional GST rate. Section 74 invocation was invalid. At best, proceedings could be initiated under Section 73, that is non-fraud cases. Directed refund of any tax and penalty already collected with applicable interest. Next, Shriram Stone Works versus State of Jharkhand 2025, 174, 475. Again, Jharkhand High Court, date of order 9th May 2025. Relevant section is section 129 of the CGST Act 2017. Let's see facts and issue of the case. Shriram Stoneworks engaged in stone mining and crushing, was subjected to detention of goods and vehicles and demand of penalty under section 129 of the CGST or Jharkhand GST Act. The department alleged transportation of goods without valid e-way bills and discrepancies in documentation. What department is alleged is transportation of goods without valid e-way bills and discrepancies in documentation. The petitioner argued the detention was beyond the prescribed period. The penalty was imposed without proper adjudication or proof of intent to evade tax. And key issue was whether the penalty under section 129 could be sustained where detention exceeded the statutory timeliness and there was no intent to evade tax. Let's see what Jharkhand High Court observed and held. Penalty under section 129 is penalty in action, which can only be imposed during movement and detention, not retrospectively or after movement ends. What is it? What section 129 talks about is a penalty in action, which can only be imposed during movement and detention, not retrospectively or after movement ends. During the movement, okay, and detention. Detention beyond the statutory period, that is 7 days for notice plus 7 days for order, as per Post 202 Finance Act Amendment, renders the proceedings invalid. Detention beyond statutory period renders the proceedings invalid. Authorities must establish that contravention was not merely procedural, but involved intent to evade tax to justify harsher action. Relied on rulings like Ram Chaitra Ram Harihar Prasad versus State of Bihar, Patna High Court and CBIC guidance clarifying that mainstream is not mandatory, but procedural violations alone don't justify the penalty. Mainstream is not mandatory, but procedural violations alone don't justify penalty. The Jharkhand High Court set aside the penalty order, held that detention beyond the permissible period under section 129 vitiates the entire penalty proceedings. In absence of evidence to intent to evade tax, mere documentation lapses do not justify penalty. Mere documentation lapses do not justify penalty. Directed release of goods and refund of any amounts collected with applicable interest. Next is Kishore Kumar Reddy versus Deputy Assistant Commissioner of State Tax 2025, 174, 474. Andhra Pradesh. Date of order is 30th April 2025. Relevant section is section 83 of the CGST Act 2070. Let's understand facts and issue of the case. Kishore Kumar Reddy challenged a provisional attachment order under section 83 of the CGST Act issued by the State Tax Department. His bank accounts and properly were attached while adjudication of alleged GST demand was still pending. The department justified the attachment on the basis of what to protect the revenue interest, citing what potential risk of asset dissipation. Key issue were whether provisional attachment can be sustained without specific evidence of revenue risks or evasion, and whether attachment during mere investigation prior to assessment is permissible or not. Let's see what Andhra Pradesh High Court observed and held. Section 83 attachment is drastic power that must be exercised sparingly and with strict compliance to CBSE guidelines, instruction number 01/2022 GST, and earlier judicial precedents. The department failed to establish concrete evidence of imminent revenue loss or intent by the taxpayer to dissipate the assets. Held that attachment cannot be justified solely on generic apprehensions or pending investigations. The Andhra Pradesh High Court quashed the provisional attachment, held that specific reasons and evidence are necessary to justify action under Section 83. Attachment before completion of adjudication and without material proof of fraud or evasion is illegal. Directed immediate release of bank accounts and property with liberty to the department to act a post adjudication if warranted. And now we are moving to the conclusions part. Conclusions drawn from the cases discussed above. These are the one-liner conclusions from the cases we have discussed above just now. Let's see one by one. Transitional or vested tax credits cannot be denied or curtailed by procedural hurdles or subordinate notifications unless statute expressly permits. Section 74 cannot be invoked without concrete proof of fraud or suppression. For non-fraud cases, action must be under Section 73. Refund of ITC on input services for zero-rated supplies cannot be denied by retrospective notifications without statutory backing. ITC on capital goods and inputs for export-oriented agriculture activity is admissible. Section 74 penalty requires clear proof of intent to evade tax. Transitional ITC cannot be denied due to procedural lapses or technical glitches if the entitlement is genuine and verifiable. DGGI can arrest before adjudication in serious GST fraud cases, but only with proper sanction, evidence, and adherence to the safeguards. Mining related support services are eligible for concessional GST rates. Mere misclassification doesn't justify Section 74 penalties. Penalty under Section 129 is invalid if detention exceeds statutory timeliness and no intent to evade tax is proven. Provisional attachment under Section 83 is illegal without concrete evidence of revenue risks or fraud, particularly before jurisdiction. That's it for today. Please note down my contact numbers. If you have any question, suggestion, observation, do let me know through email, or you can also call me on the given number. Hope you are able to learn something from these case laws, and these are helping you in your litigation practice or defend your client also. So we will meet in next video. Till then, happy learning. Hare Krishna.